Hello everyone and welcome to this video. It's been a while since I have made a video about my stock portfolio, and today we're going to be looking at the Trading 212 stock portfolio. And before we do that, I just want to say now is a very important time to invest, because you know when it's inflation, it's panic and worry. If you can save a bit of money, you might as well be putting that money into the stock market, which is going to have a good return in the future. Because if you leave money in the bank, the small interest on it is never a good return like the stock market. Like generally, let's say you had a really good portfolio like the S&P 500 stock, 8% or 10% return. You can actually get a 10% return yearly, or if it's a bit of a bad time, 7%. And you can look back at these charts. That's actually been proven. It's been shown. You can see what's happened when you put your money in the bank. There's no boost. There's no incentive. It's just sitting there. And let's say you put in £100 now. Really, in 10 years' time, that £100 that you put in has been stagnant, and maybe it's worthless, because everything's more expensive, everything's, appreciated, and then your money has kind of stayed the same. So yeah, it's definitely very important to invest, especially if you're young as well. Compound interest. I might make another video on that, the compound interest calculator. It's just fun to put in just search on Google compound interest, and you can actually say how much you're going to invest per month and then put a 10% return, and see how long it would take you to get 50,000 or even like £1 million by the time you're 60 or 70, or quicker if you've got more money. Right, let's have a little look. So overall, I have invested £1,000, just a little over £1,000, and then my return is £60. That's 5%. Now that's very good. For this time of year with all the troubles going on, I'm very happy with the 5.80%. But I know if the economy gets good, that'll probably be like 11%, 12% return. So that's really good. Let's have a look down here. So Google is basically Alphabet. That's in the green. We have £1.26. And then we've got British Petroleum. Very good. I've got £18 return. That's great. £18. Then we have Etsy, £7. Then if we go down to HSBC, that's £10. But let's look at these little percentages. It doesn't matter. Someone may go, oh, it's £10. That's nothing. That's no money. But look at the percentage of the return on investment, return on what I've put in, 17%. Then we go down Meta platforms, £4, but 30% return. And then Netflix is doing well. Nvidia, Sentinel-1, 10% is doing very well as well. Look at that, 40% return. And the one that I have my most money in is the Vanguard S&P 500. So as of now, during all this inflation, all this crisis, 12% return. Not many things give you a 12% return. The funny thing is, property, let's say you were doing property and you were doing rental, with all of the mortgage hikes and everything now, you may actually get about 6% or 7% return on your money. You really want to be trying to get high, 12%, 15%, but it's very hard in property. Property is good as well. If you have money, I would obviously always say if I had money, stock market and property definitely. But I'm just saying, like in percentages, just have a look at different properties, rental return. The stock market is really good, especially like Vanguard, S&P 500. There is sometimes where you would invest in a stock and it may go down and it may not recover. But if you go established, the best thing is ETFs, always going to be the top 500 companies. It's very, for me, I feel very safe, putting my money in. And even if I'm on low wage, even if I'm not earning much, I always try putting something in. When you think about it, I earn minimum wage and I get a little bit from, doing online work, but I'm not in a great bracket of money, but I can still, invest and get money. So anyone out there can actually do this. Maybe you don't go out as on many nights out, maybe you don't spend as much on clothes, and just think about what you need. Obviously live good, have a life, have a happy life. But if you've got any spare money, instead of putting it into a savings account, why not put it into the Vanguard S&P 500? That's what I always think. Work hard, and when I put my money away, I want it to have that return. So let's have a look at the stocks that aren't doing well. Tesla's obviously not doing that well now. And let's see here. It's a very red spike. Look at that. It's gone really down. Let's see what else is not doing well. Sentinel-1. These are all future technologies. Like some of them is for the future. Sentinel-1, Snowflake. I know that in the future, I believe, obviously, what I think is that they're going to go up, especially with all the advancements with AI and everything. Nvidia, that was one that a lot of people started selling off, but I'm glad that I didn't sell off. See here, it dropped down very low, and look here, it dropped really low. A lot of people sold off. But now, if you stayed in, buy it cheap and then sell high, or keep it for the long term, 10 years time. This is all long term investing. And what I try and do is, let's say I put £50 in, I try and start from the top here and put in a little bit, £10 in each one. But the main focus now is, probably because of inflation and everything, I will try and put more into the Vanguard S&P 500. Yeah, really trying to get more into that. Do let me know your thoughts on this portfolio and share your portfolio as well. What do you think about the stock market? What's your thoughts? What's your predictions? I always like to know. I haven't checked my notifications for a bit. Look, here we go. All looking good, not looking too bad here. Yes, do let me know in the comments below, and I will see you in the next video.